Hello traders, welcome to this episode of Weekly Watch List, where I'm going to perform a technical analysis on important futures and stock, which has a good setup. Now the market has pushed as much as it can as major companies have given their earnings, and now market is waiting for the next Fed meeting, which is going to take place on the 2nd November. Now there are possible scenarios: one, sideways trading till the Fed meeting, or pump till the Fed meeting and then dump. Since the midterm elections are going to take place in November, I don't think so Fed will do anything that will surprise the market in a bad way, but at this point we just have to wait and watch. Now starting with the Nasdaq is clearly in the trend mode and gained almost 1,000 points from its recent low. Now we had a strong bullish day on a Friday that might continue on Monday, or we will get a slightly bearish day on Monday followed by the sideways action till the Fed meeting. But more or less Nasdaq will remain in the box with a range of 11,700 to 10,600. Now the lower end or the lower price target of this box is extreme. Probably it will stay within the range of 11,700 to 11,200 at the max. Moving on to S&P 500. Now similar to Nasdaq, S&P 500 has shown a solid strength. Now S&P 500's strength towards the upside is a little bit more than the Nasdaq. What I mean by that is, like, we might get another push towards the 4,000 level before getting a rejection, and at that point it will bring S&P 500 back into this box, which ranges from 39.24 to 36.47. Now it might not go all the way down to 36.47, but it can hang in between 39.24 to 37.98. Moving on to dollar. Now dollar got rejection from its 113 level and it came all the way down to retest its support around like 109.61. It got some support over this at this level and started moving up. What level it can go to is around like 112 or 111. So we need to watch for this move, as it might give some bearish action in the stock market. Moving on to VIX. Now VIX has substantially came down from its recent high around like 34.35 all the way down to 25.75. Now this level is really important because it found support at this level multiple times. So what we can expect is, like, we can expect a pushback up towards 27.28 before the Fed meeting, and after that it might come down even further. Now let's start with the stocks. The first stock is Advanced Auto Part. Now Advanced Auto Part has this beautiful setup where it broke out from this megaphone and it's kind of like pushed higher. Right now it is at the edge of this gap fill which exists between 198 to 190. Now it can either enter into this gap fill it halfway through or completely and then get a rejection and come back down, or most likely scenario is like it might get a rejection from the lower end of this gap fill, that is around like 190, and come back down to retest this trend line support around 175 or 180, and then it might push back up again to fill this gap, either halfway or the complete. Those are the two scenarios at the play here, but most probably rejection will happen first before it starts moving to the upside. Next one is Apple. Apple has beautiful setup of this inverse head and shoulder. Apple provided earnings recently. Their earnings were good. It was not magnificent but good according to their guidance. So we have this inverse head and shoulder. So at this point, if we get a rejection, we might come back down to all the way down to 148 before started moving up to retest 150 and beyond that 160. ABBV. Now ABBV gave their earnings on 28th October. They missed their revenue by quite some margin and it gapped down. Now what gap down means? Usually when stocks gap down on their earnings, it's the beginning of its downtrend for a short period of time, and we got a gap down and it started pushing up towards that gap fill which exists between 151 to 148. It's not the huge gap to fill, it's a small one, and it might get a rejection or it might fill this gap halfway through before coming down even further. So if it start coming down, then watch for 145, 140 138.25, 138.02 for the support levels. Next one is Caterpillar. Caterpillar had this almost like a vertical price action boosted by this earnings, and what might happen is like it might get a rejection, solid rejection from this 226 level, because it got rejected from that level multiple times, and all-time high is sitting just above it at 245, 246. I don't think so it will go to that level. Probably it might push as high as 230. Let me draw it over here, and then it will come back down again. If it get a rejection, then watch for this gap fill levels at 207.75 and 199.67, because it might get a bounce back even before it start filling the gap. Next one is Chubb Limited. This one also has a similar price action like Caterpillar. I draw this fib retracement, so probably see it get a if it get a rejection from this level at 214, then it might start coming down to retest this 0.302 level, which is at 199.27, or even before that it has a support at 202, which was its previous resistance. So it might push all the way to 219. If that happens, then it might get a solid rejection. Moving on to CVX. CVX has this rising wedge, which is not looking that good. Also, these indicators are indicating that it might come back down a little bit more, because oil has pushed quite a bit from its recent low. At this point, with this fib retracement, what we can see here is like it might come back down towards 166.54, which is a 0.382 retracement from its recent high, and if you can see here, it is at all-time high, so the probability of rejection at this point is very, very high. Next one is General Dynamics. General Dynamics also gave their earnings on 26 October, pushed back higher. It is close to its all-time high, which is at 255.39. Watch for the rejection, similar to Caterpillar and Chubb Limited. Either it can get a rejection from this current level, or probably it can push high as 255 and then come back down all the way to 243.21. And if we get a strong rejection at this level, because it got rejected previously from this level, so if this level doesn't act as a support, then it might come back even further towards 235.21 before entering into this gap fill, which is at 232.24, 30.40. Next one is Lockheed Martin. Same price action, parabolic move. Watch for the 451.63, which is a 0.382 retracement of this vertical move, and it is also making all-time high, so expect a rejection from this level. NVDA is kind of looking bullish. It is also in this megaphone formation, and it is holding this formation pretty well. Now either it can push back and get a breakthrough from this megaphone, filling the gap fills, which is around like 141.51, 139.57. This is the smallest one, and the bigger one is just laying above it, which is around like 150.12 and 144.53. So if it get a breakthrough about this megaphone, it will definitely fill both of this gap, probably push as high as 165 before getting rejection, coming back down to retest this megaphone trend line for a support at around like 137 before making its next move. But right now it is highly possible that it might get a rejection, because it got a rejection from this trend line of this megaphone 2 times previously. So either it can get a rejection coming back all the way down to 125, 120 before getting some support around this level, around like 116, and started pushing higher once again to retest this trend line, upward trend line of this megaphone. Moving on to Raytheon Technologies, similar parabolic moves upon earnings, and right now it's in the resistance zone, and it might push as high as 96.54, where it might get a solid rejection, bringing it down and towards 90, probably around like 93.90, and it might hover over here within this box for quite some time before picking up the direction. So keep an eye on this setup. Also, it is forming the cup, so if it get rejection from this point, probably it will come back all the way down to 90 or 91.12. Next one is a Tesla. Tesla has a similar setup to the Apple. It formed this left shoulder head formation with the double bottom. So Tesla is picking up the direction, and probably after the Fed meeting it might push even higher to fill this gap, which is between 238.36 to 34.42, which is a small one, and the bigger one is at 263.52 and 255.48. but the upward move that it has to make to complete this head and shoulder formation is pretty big. Okay, it's almost like it has to move 75 points up from its current price, which might or might not happen. But either way, even if it reached halfway through around, let's say around like 250 260, then it will provide some formation of that head and shoulder that we can rely on to project its future direction. And the last one is ExxonMobil. Exactly the similar move as CVX Chevron, but it is getting top heavy, and probably it get a rejection from this level, bringing it down to retest 100.72, which is a 0.382 retracement from its recent high. So that's it for this video, guys. I broke down most of this stock and their trade setup as much as I can to provide you the real good insight of where and how those stocks will move and where they might get a rejection. So if you like the information presented in this video, please consider giving a thumbs up and subscribing to the channel. Thank you for watching, and see you next week. Bye.